I'm Kira Taylor, a student loan expert at the National Consumer Law Center. In this video, I'll discuss what you can do if you default on your federal student loans. Let's start with when a federal student loan goes into default. Generally, if your federal loan is not in forbearance or deferment, your loan will go into default after 270 days or 9 months of missed payments. When your loan defaults, your account is moved from your normal student loan servicer to a special default loan servicer. A loan servicer is a company that the loan holder or owner hires to handle the billing and other services on your student loans. Defaulting on a federal loan is expensive. After a loan defaults, the government can add additional fees to the amount you owe. While the loan is in default, additional interest will continue to accrue. Default will also hurt your credit score, which can make it harder and more expensive to get housing, insurance, and other kinds of loans. Plus, when you have a federal student loan in default, that makes you ineligible for additional federal student aid, like Pell Grants, and additional federal student loans, which makes it harder to go back to school. It also makes you ineligible for other government loan programs, like federal mortgages and small business loans. Once your federal loan is in default, the government can seize your tax refunds, garnish your wages, or take a portion of your federal benefits, like your Social Security payments, to pay off your debt. The government can even sue you for the amount of debt you owe, although this is less common. There is no statute of limitations on federal student loan collections, so the government can use its collection powers indefinitely. Fortunately, even though a loan is in default, it is still eligible for some of the government programs that can cancel your debt, including programs that can cancel your student loans if you have a disability, your school closed, your school told the government you were eligible to borrow loans even though you weren't, or other types of school misconduct. Check out our other video entitled Loan Forgiveness and Relief Programs for more information. There may be more relief options available to borrowers with loans in default in the future as well. If you stop making payments between 270 and 360 days ago, you may have a limited opportunity to call your loan servicer and remove your loans from default before they're transferred to the special default servicer to collect on the debt. When you call your servicer, you should ask them to apply a retroactive forbearance to remove your loans from default. You should also consider applying to enroll in an income-driven repayment plan that may make your monthly payments more affordable. Don't wait. Loans that have been unpaid for 360 days and haven't been in a forbearance or deferment will probably already be sent to the special default servicer for collections. Once in collections, it's harder to get your loans out of default. If a loan is not eligible for the government's loan forgiveness and relief programs, you generally have two paths out of default: consolidating your defaulted loan into a new federal loan, or rehabilitating your loan by making a series of agreed-upon payments. Generally, a borrower can only use each option once. Let's start with loan rehabilitation. You can get your loan out of default by entering into a rehabilitation agreement with your loan holder. For more information about how to figure out who your loan holder is, see our video, How to Use StudentAid.gov. In a rehabilitation agreement, you agree to make 9 monthly payments over 10 consecutive months, with a payment amount based on your income. After the 9th payment is complete, the loan holder will remove your loans from default and put your loans back into repayment status, collection efforts will stop, and your loans may be transferred to a new student loan servicer that will be in charge of your billing. The loan holder will request that credit reporting agencies delete the loan's record of default from your credit report. It's important that you have a plan for repaying your loans once your rehabilitation agreement is complete, so that you do not default again on your loans in the future. For most borrowers, this means applying for an income-driven repayment plan. Generally, a loan can only be rehabilitated once. You can also use consolidation to remove your loans from default. Consolidation is when a borrower pays off a federal loan by taking out a new federal loan or a consolidation loan. Once you consolidate your loan out of default, the government will stop using its collection powers. Your servicer will let you know that your loan is returning to repayment and when payment will be due. Unlike rehabilitation, your prior default will still be reported as part of your credit history after you consolidate out of default, but your credit report should show that you are no longer in default. When you apply to consolidate your loan, you can also apply to enroll in an income-driven repayment plan so that payments are more affordable. you will need to continue making payments on your loan to make sure they don't default again. So make sure you give your loan servicer a call to discuss your repayment options before your first bill is due. The advantage of consolidation is that it's much faster than rehabilitation, and you can apply for an income-driven repayment plan at the same time as you apply to consolidate. But like rehabilitation, you can generally only use consolidation to get out of default once. That's because if you've already consolidated all of your loans into a single direct consolidation loan, you aren't allowed to consolidate it again. But many borrowers have multiple loans and can still consolidate out of default. If you don't have a pathway out of default, you may still be able to request that the government stop using its collection powers. For example, the government may stop or temporarily suspend collection if the borrower shows that collection would cause them financial hardship. Visit studentloanborrowerassistance.org for more information on how to do this. Visit studentaid.gov or studentloanborrowerassistance.org, linked below, for more information on how to manage default and your other student loan rights.